So my findings, so if we would think about what is kind of the current consensual view, if you look at International Energy Agency or BP Statistical Review, etc., I would say peak oil demand is somewhere like 2030, 2035, not much to worry about. The reality is that we are just about at peak oil demand right now. This year you have quite healthy growth coming from mainly because of COVID. It's China reopening, airlines coming back, but that's gone. And then you have like 0.5% or so growth. And this 0.5% growth is consisting of a bit of decline in developed countries and then offset by growth in developing countries. So the decline in developed countries has been like 1.5% per year, roughly. Now we are at the absolute inflection point, and they are kind of highlighted on your slide here. That 1.5% is going to go to 4.5%. And that means that we are going into negative oil demand growth.
Okay, so much there to unpack. Let me just bring it back to the oil companies. We had Shell CEO on the show earlier, and one of the line of questionings that my colleague Steve was pursuing with him is how, as an oil company, you can straddle the divide between climate activists on one side who keep pushing for further reduction in hydrocarbons versus the other side, your shareholders who want to see the return on investments. Do you think oil companies are well situated now, given what you're saying about potential peak oil demand coming sooner than markets expect at this point?
No, I don't think so. I think they have to manage for decline. In reality, I think that is what they are doing. I think they are executing well. I think Shell used to be everything to everyone, etc. But they are simplifying it and focusing on what they can do. But they have to acknowledge they are in the sunset business.
I do want to get your thoughts in, when you talk about peak oil demand, how much are you factoring in terms of the China recovery here? Because the IEA is saying the second half of this year, India's going to bounce back, China's going to bounce back, but we know what's happening in China.
Yeah. So this year we are going to have something like 2.2, 2.3 million barrels of year-on-year growth. So it's 100 million barrel base, so it's same in percent. If you break that down, 1 million is coming from airline recovery globally. That has recovered now. The other million is coming from China recovery. Remember, they were in lockdown last year. So underlying the oil demand growth is very, very low. And it's also very low in China. Let's remember, the real driver of the change I'm talking about is what is happening in the transport sector and the electrification. And it might be hard we're sitting here in London to believe it, but the reality is that China is well more advanced on this than we are in Europe. 40% of Chinese cars are already electrical, and they are pushing ahead a lot. So even China they will not probably decline because the country is getting richer, but they're not going to grow significantly.
Yeah, it's interesting. The per capita income has really gone up for people in China. I do want to get your thoughts in very quickly, since you touched upon EVs. We heard sound from the Volkswagen CFO. I want to get your sense on how you see the story panning out for some of the European makers who are wanting to go the EV route, and who's really taking the pole position here.
So I think autos is an amazingly interesting sector from capital markets, because the view is that EVs are great, combustion cars are awful. If you then look at results, it's absolutely the opposite. The automakers are making a total killing on selling combustion cars right now. You saw yesterday Stellantis. Stellantis is a mass market manufacturer. They used to have extremely low margin. Suddenly they posted 14% EBIT margin, which is like 3-4 times what they used to do. Mercedes is not breaking it out in the same way, but the reality would be the same. They posted 40% margin. The reality was probably 20 on combustion and 0 on EVs. So really what's going on here is that the auto industry is pushing out EVs because that's the rationale to exist. If they don't push out these EVs, they can't sell the other cars. And even if I'm saying that of course that share of combustion cars are going to go down over time. They have absolutely zero incentive right now to push volumes. They are just going to keep prices high and hope that people buy them. So, but of course they have to be in EVs because otherwise they are dead in 2035. So they are preparing for the future, and in the meantime they are milking the combustion side. And overall, I think this is great, and the market is not getting it, and these stocks are super cheap.
Yeah, and